All right, guys, if you clicked on this video, you are most likely not a profitable trader. This is going to be a decently short, unedited YouTube video going over pretty much my strategy as well, but also mentioning a couple things that should help you out on your way to becoming profitable and stop having losing streaks, because there should be no reason you should be having constant losing streaks, maybe once in a while, but you should not be having like 4 losses in a row. That means you're most likely taking improbable trades and you're just over trading in general. So let me show you exactly what I do, my system that has allowed me to win the last 4 weeks in a row by taking high quality trades, less amount of trades, but higher quality trades. And that's how you want to be doing. You want to treat this like a sniper. I love to tell a lot of people, have you ever seen a sniper with a freaking switch on it? Exactly. So make sure you stay through this entire video. It's a short video. If you can't stay through a 10-minute long YouTube video, then you probably shouldn't be trading anyways. So please stay through the whole video if you actually want to start making money doing this and stop getting into constant losing streaks. I used to be the same way you are if you are currently getting lose streaks, and this is how I fixed it. I'm gonna break it down in a couple of steps, and yeah, that's pretty much it. Enjoy the video and make sure you watch till the end. Now, before I do show you this, right now we're currently doing a 7-day free trial. If you actually want to trade with me and my team, it's me and 2 other guys, so you get access to 3 trading strategies, 3 people live every single morning to trade with that have made money in the markets. Some people that make even more money than me, honestly, as I'm still starting to scale this out now that I'm profitable. But if you want to access that, join our Discord and also get an entire 13-minute breakdown with a PDF guide of my actual strategy that I trade every single day. Check the link in the description. Go ahead and sign up for that. I'll send you the video, 13-minute video, and I'll send you a PDF checklist that you can use to actually follow along with that trading strategy as you're looking at the charts. So make sure to look in the description, check that out. And if you want to trade live with us, make sure you join the free trial, because we're only doing the free trial for a limited amount of time. And yeah, let me go ahead and show you guys how we do it. So the first step, I'm going to type it out here for you. Enough yapping. I'm going to yap a little more, but all right. This is for the actual entry model. We're going to ignore this for now, okay? But the first step to stop losing streaks is first, forget everything you know right now, okay? Whatever strategy you're doing right now, you got to find a high quality entry model, okay? High quality, high probability entry model, okay? That is the first thing you need to focus on. I'm going to break that down a little bit in this video, but again, if you want, I've already made a whole video breaking mine down step by step, link in the description again. But I'll break it down fairly simple here for you. A high probability entry model, what does that mean? If you're not using a high probability entry model, then that is why you're getting lose streaks or your win rate / risk management is off. That's what we'll target in step number 2, okay? So high probability entry model, can't say that word down. Risk management. And then 3 is discipline. 3 steps, bro, to change literally your life, the way you trade, start making money doing this. So first step, high probability entry model. Let me run mine down pretty simply. So usually I'll zoom out in the market. What direction is the market going in? We're going up right now, okay? We're going up on the hard time frames. So I'm looking for a long, all right? I want to find a hourly fair value gap. Jesus, a mess. As you can see here, though, right here, mark out a hourly fair value gap. There's 2 times that are key for these retracements and expansions, okay? That is going to be the 4-hour closes, okay? So the 4-hour closes, you get a 4-hour candle close at, and I'll show you here. Actually, well, it's not going to show properly, but a 4-hour close closes at 10 a.m. and then another one at 2 p.m. I'm talking Eastern time, New York time, okay? That's the times that these close at. So mark out a bullish fair value gap on the hourly or the 15. Those are really the time frames. You can get a 30-minute if a 30-minute gives, but that's usually an odd one. I've never really gotten a 30-minute. 15-minute or 1 hour. Then once you get the 1 hour bullish fair value gap, go back down into lower time frames. This is where you're going to snipe your actual entry, okay? So A bullish fair value gap, if you didn't know. A fair value gap in general, if you didn't know. Let me go back to the hourly. If you do know, just give me a second here. I'm going to explain it here real quick. So fair value gap is pretty clearly drawn. I'll delete it here for you. So we see a big drizzy candle up. The candle before it has a wick. The candle after it has a wick, or doesn't have to have a wick, but just the space that is untapped in the middle candle, which is a gap. Let me go ahead and draw it out for you. It's right here, okay? So we draw it out from here to here and expand it all the way out, okay? So that's a fair value gap. That's a bullish fair value gap. High tendency to be a zone of retracement and rejection and propulsion in the continuous direction, okay? So usually we'll want to see a retracing back into this. We balance price, grab orders, fill orders, and then expand, continue to expand. So we're actually going to use this for the higher time frame bias and then inversion for the lower time frame entry, and I'll show you what I mean by that. So we go back down into the 1 minute. 1 minute, I go from the 1 minute, 2 minute, 3 minute, 4 minute, 5 minute for my entries. So I'll scale up from whatever I see from there. I usually won't go into 30 second. I know a lot of people go into 30 second, but I don't see enough like confluence in that. So this is a 2 minute fair value gap right here, okay? We draw it out like this, boom, here. On TradingView, it doesn't let me change to 2 minute candles, but you would draw it out as a 2 minute candle here, 2 minute fair value gap. It's a bearish one, as you can see, because we're going down. Now, I want to see, after we draw the hourly fair value gap, I want to see price retrace back into it, because this is a common place for price to retrace to and then continue to expand, okay? So, as we can see here, we retrace back into it. Now I want to see price expand. Two things I want to look for price to actually expand. We already have the higher time frame fair value gap, the hourly, which is right here. Inverse fair value gap displacement and a change in state or a break of structure. Let me show you what that is. So we'll start off with the inverse fair value gap. Inverse fair value gap. Right here, we get a bearish fair value gap, okay? I want to see us displace and destroy this thing. So as you can see, boom, we close above it. Here, we fail to close above it. Here, this is a beautiful close because we get both of the things I want, okay? So once we close above a fair value gap in the opposite direction of it, it's now an inverse. So now we're saying price is going in the opposite direction. In this case, buyers are stepping in, taking over from the sellers. Bulls are stepping in, and we have balanced price, and we would just want to keep pushing in the opposite direction, okay? So here, boom, more buying pressure. That is what an inverse fair value gap is. Now, a change in the state of delivery or a break of structure just means a candle close above the last swing high. Okay, so in this case, we're going down, so I want to see a candle close above the last swing high. The last swing high, since this is a 2 minute gap, there is actually no green candles on the 2 minute chart here. So the last high is right here. Draw it out. It's already drawn out like that. Boom. We already have it drawn out. This candle ends up actually closing above that, giving us an entry. Set the entry at the close of the candle if you want, and then just stops anywhere down here. Depends how you risk. I like to usually put it below the fair value gap, a lot below, or even I'll do below the last swing low. But here we have a swing low and the fair value gap, so you can do it here. And then you can just target untapped highs on the left. So here we have a high, that'll be your TP1. TP1, that gets you almost a 1.7 RR. Even if you do the swing low down here, you get a 1-to-1 RR, and then you can take your first profit there and then just target a 1-to-2 for untapped highs from the huge leg down from the further left, okay? But anyways, that's just a high probability entry model. What does this mean? What does a high probability entry model mean? It has a higher chance to actually win when everything happens in it, okay? So you do not want to be taking trades that don't check off everything in your list if you have a high probability entry model. High probability entry model, how many damn times am I going to say it? Has a higher win rate, obviously. So if you only snipe these trades that are higher probability, you're going to have a higher win rate. Okay, that is step one. Once you have that, risk management. Real quick, risk management. please, please, please start moving your stops to break even and stop moving them lower. Never move your stop loss lower. You got to understand, like, unless you're changing the size of your position, don't move your stop loss lower. What are you doing? Enter every single trade knowing how much you're going to lose. Every single trade right now with a 50K account, in that 50K account, I will lose $300 max. Okay. If there's slippage, I'll lose like 350 or something like that. But I'll lose $300 max. Okay. So adjust the sizing of your contracts to that amount. Okay. So adjust the sizing of your contracts to that amount. And again, if you guys literally want to trade live with us every single morning, just check the link in the description. We have a 7-day free trial for completely free. Talk to us in the morning. See everything we have to offer. Toto, which is the other guy that runs the community with me and other guys, we have an 8 hours of content breaking down every single concept, getting into trading. Okay, every single thing. And we're live in the calls too. You can literally talk to us, unmute in the call. So make sure you check out the link in the description and join us. Now, risk management. Right, that's what we're on. Make sure you risk the same dollar amount every day. That's what you want to do. There's literally 3 things to this. Same dollar amount per day. Break evens. You want to use break evens. What do I mean by this? So let's say your 1-to-1 is obviously when you hit a 1-to-1, right? Or you hit a significant high, like right here. Bro, if you're not trimming contracts or anything like that, at least move your stop loss to break even, because now you're protecting a winning trade from becoming a loser. Okay, you do not want to become, you don't want a super winning trade like this to become a loser. I will always move my stops to break even at a 1-to-1, always. Okay, because the probability that if it comes back down here, that it's going to keep going and completely burn through your stop loss is very high. This boosts your win rate individually after you have like 100 sample size. Boost it by about like 5 to 7%, which is pretty significant. Okay, I was doing this. Obviously, some of them will retrace back, stop you out, and then go back up. You're just gonna have to deal with that. But I did the math on it. It works for me. And then the third thing, oh shit, is taking profit. So you can either take profit at the at these highs, or you could wait for your full TP. So usually what I'll do, stop loss below the lows. Dang, I can't even extend this out anymore. Long position. Usually what I'll do, stop loss, and then at a 1-to-1, holy gosh, this is long. Pause. My bad, yo. All right. Here. So once you hit a 1-to-1, obviously move stops to break even. Here I won't trim yet, unless it's a low probability day. Like if I'm trading like a Monday or something, and then I'll trim just to make sure I get my money and don't go in the red for the day by accident through commissions or something like that. But usually I'll just hold and target my full TP, whatever, if there's like another external high here. But I'll typically go for a 1-to-2. That's usually how my risk goes, 1-to-2. That's when I'll sell full. So my full TP is usually like $600 per 50K account, and my stop loss is $300. On light days, like a Monday, for example, I might do half size, but please risk the same max per day. Okay, max. You don't want to be wishy-washy on that. Now the last thing, real quick, bro, if you actually want this to work, stop trading every goddamn day. Okay, stop trading every day. Look at the charts every day, but do not take a trade every day, because your higher probability entry model is not going to present itself every single day. It wouldn't be high probability if it presented itself every single day, bro. Unless you're a professional scalper, you want to be the best scalper in the world, you should only really be taking max 2 trades per day. I only take one trade per day. That's it, because your emotions are going to be thrown off completely if you take more than 1 trade per day. Let's say you lose the first trade, you're going to try to revenge trade, make that money back. Prevent yourself from revenge trading by literally not even taking a trade. Okay, yesterday I didn't take a trade, sat on the charts for 2 hours, didn't take a trade. That's pretty much it. We send out futures analysis, we send out trading analysis throughout the day for our actual trades, and then we're live in the calls every single time. And then for every single trade, we send out a breakdown, a detailed, complete, detailed breakdown of the actual trade. So if you want to join us and see what we do day in and day out for 7 days for free, link in the description, and just check us out. All right. Other than that, though, I will see y'all in the next video. If you have any questions, comment them below. If you like this video, make sure you actually drop a like and subscribe to the channel if I actually helped you out whatsoever. But yeah, I'll see y'all in the next one. Peace.